It is the first Tuesday of the month, and that means we will be addressing the monthly charts in Sector Spotlight. But it is also ChartCon week. Later this week, on Friday the 7th and Saturday the 8th of October, StockCharts.com will be hosting ChartCon 2022 with a great lineup of speakers. If you have not subscribed yet, please do so. The link is in the description of this video. Also, in case you are not a member yet, this is the time to sign up, as members get a massive discount. Back to the markets. Stocks lost almost 10% in September, continuing the slide that started at the beginning of the year. Bonds are following that path while the US dollar remains very strong. Commodities are holding above support levels, which is also what Bitcoin is doing. Hello Sector Watchers, welcome to the show. This is the 147th episode of Sector Spotlight for Tuesday the 4th of October. And because of my travel schedule to attend ChartCon, I'm recording the show on Saturday the 1st. My name is Julius the Kempenaer and I am presenting to you from Amsterdam in the Netherlands. We will be looking at asset class and sector rotations and check out the monthly charts which will fill up the show. Ladies and gentlemen, this is Sector Spotlight. As we are looking at monthly charts and monthly rotations, I thought for this occasion to not start with the daily and the weekly RRGs, but with the weekly and the monthly RRGs. So on the right hand side you now have the weekly RRG, and on the left hand side you have the monthly RRG. And this is the universe of asset classes that we are using here in Sector Spotlight on a regular basis. Now, when I introduced monthly RRGs, I already told you that these are really long-term trends. Probably, potentially, too long for a lot of people. I think they're quite long. There are institutional players who like to look at them because they give the really long-term picture. But if you're a moderately active investor, I think that these monthly RRGs are too long. Nevertheless, they can give you a very good high-level overview of what's going on in the markets, and especially in this case in asset classes. And if we look here, then one thing's very clear. Bitcoin is on a losing streak. It's coming from, obviously, from far to the right, from very strong outperformers. It's going towards the lagging quadrant right now. And if you look at the table, because I set this to 9 months, which brings it to exactly the start of the year with regard to performances. And you can see that Bitcoin this year to date, lost 58%. Compare that with a gain of the US dollar of 17%, and you can imagine that a spread between those two assets would have yielded great results. So here's the US dollar. Commodities are still very strong. They're way to the right on the monthly RRG. They're losing a little bit of momentum, but it underscores the strong trend that commodities definitely are in. And what you can see more importantly here is that stocks are rotating from leading into weakening. And on the other hand, the fixed income asset classes, government bond, high yield and corporate bonds are moving the other direction. If we bring that to the weekly RRG, then you can see that Bitcoin is picking up relative momentum. It's doing relatively well over the last few weeks, but it is very low on the RS ratio scale, which still makes it a relative underperformer versus, in this case, VBINX. I'm going to tick it off to better visualize the other rotations here, fit that, and we see that commodities are going through a corrective move. They're inside lagging, but they're picking up. US dollar is rotating back, it's picking up strength, and we know that when something is curling back up, when it's inside the weakening quadrant after a stint through leading, that is usually the signal for the start of a new leg in an already strong relative uptrend. If we zoom in on the other asset classes, we see that SPY is now, it just bounced off that 100 level in the RS ratio scale and it's coming back down now, it's losing relative momentum, so that is actually not too strong for stocks. And we see that high yield and government bonds are doing the opposite, they're moving the opposite rotation, bouncing off 100 on the other side of the graph and starting to move back to leading. Corporate bonds are moving into lagging. Maybe they need a little bit more time to pick up, but right now I would say that bonds, especially government bonds and high yield, are the better option versus the S&P 500. Let's look at some of the individual charts here. Let's talk about a few of those completed monthly charts for September, and let's kick off with the S&P 500, with the asset class stocks. And when you look at this chart, it does not look good, because at the end of the month we really pushed below the previous monthly low, which was here, which was 36.87. So let's say 3600. We closed below that at 35.85. This is we can still, if we really bounce back rapidly, then maybe at the end of the month we can say, hey, this was not really a break. But if you have to go with this, it looks like a very clean break already. And with that information in the back of your head, you need to go looking for potential target levels. And on these monthly charts, I prefer to do that looking at previous highs and lows. And the first one that we see is 3380, let's say 3400. Although that wasn't really respected here in the summer and in Q3 of 2020. So the next level, which is untouched since then, is around 3200. So right now we're trading around 3600, and our initial targets are 34, maybe 3200, while the upside is really well protected, because you know that when a market breaks support, very often that old support level comes back as resistance. And when you look at monthly charts, that obviously becomes a very serious level to be aware of. So for the S&P 500, that's 3600, maybe a little higher, but around that area where we can find resistance. And the way down is open towards 3200, 3400. Let's see how this goes. But the downtrend in the S&P 500, lower highs, lower lows, is still intact. The second chart is the one for government bonds, and we have history going back to 2012 for this ETF, which is the GOVT ETF. It's covering all maturities in the US yield curve, and that is a serious break. I mean, we already broke that support level back in May. We rallied back up, sort of, again, as I said, old support became resistance. That here was around 24.34, maybe I should have plotted this line slightly higher. And we are now breaking below the previous monthly low, which is another signal, another confirmation of the weakness in government bonds, pushing yields up across the curve. IEF is the 7 to 10 year Treasury bond ETF. And here we have a little bit more history, but we see a similar picture where IEF broke below important support, bounced here in May, but right now we're taking out the previous monthly low. That was the June low, and we already broke below this level here around 100, which has 1, 2, 3, 4, 5, 6 touch points. And then if you would make this a closing chart, then it would be touched here as well in August, and now we are breaking lower. Potential targets around 92 and maybe 88, which is a significant rise in 7 to 10 year yields in the US. If we translate that to stocks, rising yields, usually not the best signal for the stock market. The US dollar, on the other hand, continues its rally. It's a massive rally right now. Look at what happened since the start of 2021, when the dollar index was trading below 90, 89, and we're now at 114. That is a serious move. We broke this trading range in which we were since 2015. That was a massive signal for further strength. And if we use the height of this range, which is, let's say, roughly 90 to 104, that's 14 points, maybe 15 if you go a little bit, well, it's 89. So 15 points above 104 brings you to 119, 120, which is the all-time high of the dollar index, which was set in 2001 and 2002. Obviously, there's plenty of room for corrective moves in the dollar index, so we can certainly run into some weakness temporarily, but the longer-term trend here is clearly in favor of the US dollar versus other currencies in the world. And then Bitcoin. This is a long-term chart of Bitcoin, and I put it on a semi-log scale because otherwise the moves are almost invisible. And what we my longer-term view for Bitcoin is that we have completed a very long-term double top when we broke below. Let me bring in the crosshair here. When we broke below, let's say 30K. In June. That was a very important signal for Bitcoin US dollar. That completed a double top with the top set around 65, 66,000. And the initial drop brought us back to 17.5, which, lo and behold, was the high that we saw at the end of 2017. And that old high is still functioning as support. So for the time being, there's still some support for Bitcoin. We may even see a bit of a rally within this range between, and I'm going to put it around 18,000, the bottom of that consolidation that we're currently watching. We could even go from 18,000 to 25,000. That wouldn't even change the image here. In between, there is an in-between high around 22,500. So the upside will be very difficult for Bitcoin, but because it's trading at such a high level, a couple of $1,000s could still be an interesting trading opportunity. But remember, the long-term picture, the long-term outlook here for Bitcoin US dollar is in a downtrend, completed a big head and shoulder stop. And if we drop below that 18,000 support level, I'm afraid that we seriously have to consider a further decline towards 12,500, 13,000 US dollar for one Bitcoin. That's quite different from 60,000 or 66,000. For sector rotation, I am going to take the same approach. We're going to have the monthly RRG on the left-hand side and the weekly RRG on the right-hand side. And it becomes immediately clear how strong the energy sector was and still is this year. The tail is 9 months, so it starts at the beginning of the year, and you can see how strong and how disconnected the energy sector was and still is from the rest of the sectors. If you look at the performance in the table, energy is up 33.9% year to date. And if you compare that with the worst sector, that is communication services, which is down almost 38%. Imagine having bought the XLE ETF at the start of the year and sold the communication services ETF at the beginning of the year. That is what you can see and what you can do and achieve when you look at relative strength movements. Obviously, this is a exceptional return, but look at the dispersion between the strong and the weak sectors. They're quite big, they're quite strong, and it definitely offers opportunities. I am going to take away the energy tail from this graph to get a better handle on what's going on right here. And what you see here is what we've been discussing on the weekly charts for quite a while. And that is the strength for the defensive sectors. On the monthly RRG, that is still very clearly visible. You've got utilities, you've got staples, and you've got healthcare, all traveling at strong RRG headings and all powering into the leading quadrant. This is interesting long-term information. Keep that in the back of your head, that those long-term trends are still and maybe even getting more in favor of those defensive sectors. And if you look at the consumer discretionary and technology sectors, two sectors together about 40% of the S&P 500 market cap, they are inside lagging or very close to crossing over into lagging. Now bring that onto the weekly RRG and see where we are, then you can see that energy is rotating back up. That is confirming that really long tail that you saw in the monthly. We have utilities as the strongest sector on the weekly scale, rotating back up and moving towards leading again. That is totally in line with what's happening on the monthly. Then we have healthcare and staples, and they are picking up again. It started to look over the last couple of weeks that they were getting weaker and weaker, but before they are hitting the 100 level on the RS ratio scale, it looks as if they're starting to pick up again, and they're coming back in line with those monthly tails that are moving further into the leading quadrant. Communication services obviously underscoring its weakness. And then we have technology, which is right here, rotating down, going almost through the center of the chart, but the heading is negative. And that's in line with what we see here. So all in all, I think that we have to conclude that the defensive sectors are still leading the way. They seem to be getting back into an outperformance mode. So utilities, staples, healthcare, and then energy as the odd one out, they are the ones that are going into the right direction. And the stranger one is industrials. If you look at the industrials tail, that's moving into leading here, and it's also on the monthly, where is it? Right here. It at a pretty strong move. So I'm going to keep an eye on the industrial sector, because that's quite an offensive sector actually, which is moving not in line with the other offensive sectors. And you know, when you follow Sector Spotlight, when something is not doing what you expect it to do or what it should be doing, that's usually a thing that you need to pay attention to. We had the same story with the consumer discretionary tail that was basically going rogue on the weekly RRG, moving into the leading quadrant while the market was going down. Discretionary being a very offensive sector that was going against what you would expect, and you can see that now in the last 2 weeks is starting to roll over and seems to be getting back in line with the expected behavior in a weak market in general, and it's getting back in line with what you see on the monthly tail for the consumer discretionary sector. Let's take a look at a few of those monthly charts for sectors, starting with communication services. You can see how clear that break back into that old range is happening at the moment with the close at the bottom of the bar. Looks like we're heading for a retest of support around 135, which is still quite a long way to go. So not a lot of goods for communication services to be expected in the next couple of weeks. The second sector is consumer discretionary. Pretty good example of old support, old resistance coming back and being respected again with the high here at 1375 last month. And we're now at the bottom of the bar at the close of the month, and it looks as if we're heading for support around 1050. And of course, when consumer discretionary declines, it's very hard for the S&P 500 to rise. If we look at consumer staples, that's interesting because this is one of the defensive sectors, and it is a very clear break below support. Just above 700, 705 was a very nice support level. That's now broken at the close of the month. And I would almost say when even consumer staples is breaking support levels, while it's still relatively outperforming the rest of the market, that is not a good sign. If we go to information technology, similar picture. Looks a lot like the S&P 500, but we closed below support. That support level was 2150. We closed at 2079, so let's say 2100, just below 2100. But it's definitely a clean break of that support area, which means that the next target is around 1945, 1950. but maybe even 1800, while the upside is well protected by 2150. So on the upside, we are going to see resistance very, very soon, while on the downside, there is quite a bit of a move before we hit the first support level. That, from a long perspective, long trading perspective, that's not a good risk-reward scenario that you want to invest in. Then we move to materials. Again, this topping formation that we discussed a couple of months ago, that clear break, then we had a bit of a rally back, old support became resistance, did it again last month, and then we are now breaking the 440 support area, 440 support level in the materials sector, which opens up the way for a further decline towards 390. Again, with the upside protected, capped at 440. So again, a very negative risk-reward ratio from a long trading perspective. This needs to find support somewhere, and it's very likely going to be between 390, maybe that little old high here, but it's kind of singled out around 400. So make that a range between 390 and 400, but it's still quite some way to go on the downside. Then we have real estate. Again, very clearly a series of lower highs and lower lows. Another break of previous low, another break of support in that sector here. We are in the middle between resistance and support, and the support area here is between 200, 205 and 210, while the upside is capped near the old low here around 240. So also for the real estate sector, not a lot of positive things to expect actually. And then utilities, again, a very defensive sector. Here you can see the push to new highs. It was marginally, because here this month the high was 395.23, and the month before was 395.11. That's 20 basis points higher, but it was a recorded all-time high. But then you see the decline pushing utilities all the way back to the lower end and closing at the low end of the bar in September. Little bit of support left, well, not little bit, support left around 320. If that goes, we are probably looking for a move towards the 300, 295, 300 area. I'm afraid there are not a lot of good charts to find from a monthly perspective, and we have to be aware of those long-term negative trends that are present in the market. We'll try to find and navigate our way through these tougher times and see if we can find some interesting trading opportunities, but otherwise there's not much more that we can do than sit tight and look for alternatives, maybe other asset classes, maybe overseas. There's always an uptrend somewhere. When we wrap all of this up for all the sectors in our table, as we do every month, then we can see that the month-to-month returns for the last month, they were negative across the board. All sectors were negative, with real estate topping the list with a loss of 13.6%, the S&P down 9.3%, and healthcare actually the strongest sector with only 2.74% negative return. Interesting enough, there's one sector that set a new all-time high, and that was utilities. It wasn't much, only a couple of points, but it was a new all-time high. It peaked below that previous month's peak, which was actually last month's peak. So 2 months in a row, utilities set a new all-time high, but they closed at the bottom of their bar, losing 11.5% for the month, which is quite an interesting move. That is also one of the two sectors that is still in an uptrend on the monthly chart. So utilities and energy are the only two sectors that, when you just look at higher highs, higher lows as the definition of an uptrend, only energy and utilities are ticking those boxes. And that means that there are a ton of sectors in downtrends. Communication services, discretionary, staples is in a downtrend. And you see industrials, tech, materials, real estate, and also the S&P in a downtrend. And healthcare and financials are moving sideways. They haven't started a new series of either higher highs, higher lows, or lower lows, lower highs. Here are the support and resistance levels as I've marked them, predominantly using the previous highs and lows in that trend. And here the downside risk and the upside potential. All in all, market remains weak. Majority of the sectors in a downtrend. We just have to wait and see how the month of October will treat us. And that wraps up Sector Spotlight for this week. Thank you for watching. Don't forget to sign up for ChartCon 2022, which will be held on Friday the 7th and Saturday the 8th later this week. The event is virtual, but the speakers are all in the StockCharts office in Redmond, Washington. And as we'll be using our brand new studio, this is going to provide our attendees with a great viewing experience. Please remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. You can watch the show on YouTube or via StockCharts television on any of the on-demand channels. On Monday, Tuesday, the 10th and the 11th of October, I will be traveling back to Amsterdam, so there will be no new episode of Sector Spotlight that week. Sector Spotlight will return on Tuesday, the 18th of October, and I'm looking forward to seeing you then and there for a new episode of Sector Spotlight.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.